I'm going to move on to the next slide, which is a savings example for an employee when an employer puts in the Zane system. And this, I bring it back to acronyms. I told you I would, just to kind of bring everything back together. Remember, the employer contribution is the HRA, and the employee contribution is going to be the POP. So let's walk through an example where the employer says, I don't offer anything. Let's say you walk into a 10-person company. Like if you walk into a Subway and find the owner, he has the average Subway owner owns 3 or 4 stores, and doesn't offer health benefits to their employees. Walk in there. Let's say John works there, who pays 30% of his salary in taxes. He's a manager, and has a $300 per month policy. Remember, there's let's say this is what it looks like beforehand. He's got a $300 per month policy. This is his take-home pay. His taxable salary is $4,000 per month, of which he pays $1,200 in taxes, or 30%. So his net take-home pay is $2,800, of which he then pays the $300 policy out of his own checking account. So without changing anything about his policy, the employer decides to input the Zane system. Here's what John's going to add his $300 policy to the system, and here's what we're going to tell the employer to do. Employer, we're going to tell them first to reduce the taxable income by $300. You see that there? $4,000 is now going to be $3,700. That means the taxes are going to be reduced by $90. So he's only going to pay $1,110 in taxes. We're basically going to move the $300 we took out here and add it back in as a tax-free addition or tax-free reimbursement through the employee contribution, or POP. And the net effect is we just moved money from tax. We just gave this employee a tax deduction on his paycheck for individual health insurance under this POP plan, and his take-home pay is going to go up $90 per month, and the net savings is going to be approximately $1,000 per year. In other words, the employee just saved 30% on his health insurance premium in income and state payroll taxes. The other key thing to realize here is that the employer is also going to save money on this deal. They're not offering any contribution here, so it's not costing them anything. This is purely employee funded. But since they are reducing the taxes that they pay, they're not going to have to pay the FICA taxes, 7.65% on this $300. And that means that the employer in this example is going to save 7.65% of $300, or approximately $23 per month. All right, I'm going to move on to the employer contribution. So this is the same example where John pays 30% of his salary in taxes and has a $300 per month policy. He works for a company that starts to offer the Zane system. In this example, let's say that Subway that we talked about earlier decides they want to contribute $150 per month through the HRA or the Zane system. Same deal on the left. Taxable salary is $4,000. He was paying $2,800. Take-home pay is $2,800, of which he then pays his $300 policy. Same thing on the right, except we're going to do things a little bit differently. Since the employer is contributing $150, the employee only needs to contribute $150 extra, because 300 minus 150 is 150. So we're going to have 2 items on this paycheck, one for the employee contribution, the POP, and one for the employer contribution, the HRA. So in this case, we're only going to reduce the taxable income by $150 for the POP, because we only need $150 to cover the employee's portion. And then there's going to be 2 additions. We're only going to reduce the taxable salary by a little bit this time. And then there's going to be 2 additions that are 100% tax-free. One is an extra $150 that was added in by the employer, and one is the $150 that we moved from taxable salary to non-taxable salary as a tax-free POP addition. So you can see here that the employee's paycheck is going to go up much higher, approximately $195, almost $200 per month, and the net savings are going to be $2,300 per year. In this case, the employer is going to be spending $150 on this plan, so they're going to be increasing their expenses. So it's not going to be a savings example for the employer because they decided to contribute.